Saudi Arabia attacks the United States and seriously threatens the dollar's status as the world's reserve currency.
The European Banking Authority is making significant strides in crypto regulation across Europe, and Joe Biden has launched an offensive against crypto mining in the United States.
An announcement on the official account of the BRICS bloc confirms this. The petrodollar agreement between Saudi Arabia and the United States has expired, and there is no new pact in place. Rumors had been circulating since June 9th, marking the 50th anniversary of the alliance between the two countries. This agreement, established in 1974, was designed to rescue the US dollar from its precarious position after abandoning the Bretton Woods system, which was based on the gold standard. At that time, salvation came from Saudi Arabia. It was agreed that in exchange for military security, the world's top oil exporter would use dollars to sell crude oil and buy treasury bonds, thus helping to finance budget deficits. This mechanism eventually extended to other oil sellers through OPEC. But now, the situation has changed. Crown Prince Mohammed bin Salman Al Saud decided not to renew the pact. As a result, Saudi Arabia will now sell oil in multiple currencies, including the Chinese yuan, the euro, and the yen instead of exclusively in US dollars. With this diversification, the dollar ceases to dominate oil trade. The Arab nation is already selling oil to China using yuan and has recently joined the BIS trials for cross-border payments with CBDCs. The fact that oil is no longer exclusively denominated in dollars has implications beyond the oil and finance sectors. While the agreement required that oil be sold only in US currency, it upheld the dollar's status as the world's reserve currency. Global demand for dollars to buy oil has helped keep the currency strong, making imports relatively cheap for American consumers. Additionally, the influx of foreign capital into treasury bonds supported interest rates. The expiration of the petrodollar strips away the strength of the US currency and, by extension, the country's financial markets. If oil prices are set in currencies other than the dollar, it leads to a decrease in global demand for the greenback. The step taken by Saudi Arabia is significant not only because it marks the end of the petrodollar system, but also because it initiates a new phase in the de-dollarization process being driven by China and Russia for several months now. The initiative is part of the trend seen in many other countries to move away from the dollar. Most analysts agree that the exit from the petrodollar does not represent a fatal blow to the US currency. While it doesn't necessarily mean the end of its dominance, it certainly weakens it. And here you are looking at the chart of the dollar index. The DXY, in its weekly time frame, has analyzed by the Crypto Insight team in this graph. We are currently in a strong bearish momentum, now situated in a deep downward channel. Institutions make a decisive move, and the trend continues. We've identified a downward channel, which you can see as we've marked this channel. The alpha angles speak for themselves, so what should we pay attention to now? On one hand, we are in a bearish channel. From 2006 to 2014, there was an accumulation process for the dollar, which drove the price up from 2014 to 2021, continuing with a reaccumulation process. Now, let's focus for a moment on the institutional target of the accumulation process. Major investment funds, large banks, those who manipulate the price at will, accumulate up to the price level they aim to reach. Now, I want you to notice, in a somewhat pseudo-schizophrenic way, how the price has reached the first institutional target, then moved on to hit the second institutional target of the accumulation process. This isn't magic. It's about understanding how smart money manipulates and moves the price at will. Now, pay attention to the following. If we look for the institutional target of the reaccumulation process, notice where the first institutional target leads us. Again, this isn't black magic. It's about understanding financial markets. The first institutional target of the reaccumulation process is the second institutional target of the accumulation process. That's why we see this V-shaped price reaction that began in October 2022. With that said, what else do we see? Well, here we have a bearish impulse, followed by its corrective pattern, working through a Z pattern in terms of time consumption, offering us a new Z pattern. Now, if we flip the impulse from this point, here we see its W, its poor I, and this is a full Z pattern, which must seek that indicated level. So what do we see then? So, if we zoom in a bit on this weekly chart of the dollar index, we see a bearish impulse, a corrective pattern in progress. And here we have the guideline of this Z pattern. Now, we'll see how this unfolds. But why wouldn't they attack the macro structure after setting a trap, which we already know why they did, and then respect the structure they need to respect? Why wouldn't the dollar start a bearish path, understanding that we are already at market extremes, at the top of a bearish channel that set a trap and has reached the second institutional target of the accumulation process, which is also the first target of the reaccumulation process, and that this Z pattern impacts against a key macro structure. It seems prudent to adopt a negative stance when analyzing the DXY. Welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
The European Banking Authority, EBA, has introduced new rules to regulate certain types of cryptocurrencies in Europe. These rules focus on two types of tokens: asset reference tokens, ART, and electronic money tokens, EMT. ART tokens are cryptocurrencies backed by assets like gold, real estate, or a combination of different assets. EMT tokens, on the other hand, are cryptocurrencies that maintain a stable value because they are linked to traditional currencies like the euro or the dollar and are primarily used for payments. The EBA has created a set of regulations to ensure that issuers of these tokens have sufficient financial resources to cover any risks. Additionally, if an issuer is in a higher risk situation, they must increase their financial reserves. The rules also specify that issuers must adjust their own funds to a specific percentage of the value of the assets backing their tokens. This adjustment must be planned and fulfilled within a specified time frame. An important point is that tokens backed by assets like gold or real estate are also considered highly liquid, meaning they can be quickly converted into cash. The eBay has placed limits on the amount of these tokens that a single issuer can offer to avoid excessive risks. These new regulations are crucial because they aim to protect investors and ensure the stability of the financial market by requiring token issuers to have enough funds to cover potential losses. The eBay is trying to prevent situations where investors might lose their money. Additionally, by limiting the amount of asset-backed tokens that a single issuer can offer, they are aiming to reduce excessive risks. This reduces the risk of the market being affected by the collapse of a single issuer. In summary, these rules are designed to make the cryptocurrency market safer and more reliable, which is beneficial for both investors and the economy as a whole. And now, let's turn to the United States, where the Biden administration has launched a brutal attack on cryptocurrency mining with its proposal of a 30% tax for the fiscal year 2025. In stark contrast to Donald Trump's pro-crypto statements, who wants the United States to lead the Bitcoin sector, Biden justifies the tax due to environmental concerns. However, critics argue that this is an ideological persecution that could destroy the industry, eliminating billions of dollars for investors in the United States and Canada. This devastating tax, implemented gradually over 3 years, would make many mining operations unviable due to tight margins and fierce competition. Small businesses would be the most affected, forced to close or relocate to countries with better tax policies, resulting in massive job losses and a blow to the U.S. economy. Large companies would benefit, further centralizing the sector and stifling innovation. Moreover, some warn about the constitutionality of this proposal and consider the tax a central planning measure that contradicts democratic ideals and may have significant ethical implications. It reflects a trend towards hardline policies that the founders of the United States tried to prevent.
And don't forget to support the channel by liking this video, subscribing to the channel, and clicking the bell so that YouTube notifies you of future posts. Share this video, as I'm sure other cryptocurrency communities you know would love to have this insight. Good luck with your trading, and see you next time.